Good morning, traders. It's Monday, April 11th. Taking a look at the charts, we've got the SPY ETF, the SP 500, and we've been consolidating here for the last couple weeks, starting to get into this kind of choppy topping pattern where we start to see the market kind of bounce around. We've had some big gaps to the downside, then back up, big downside, back up, downside. We're getting very choppy here, and it looks like we could be starting to form a little bit of it. Well, we're definitely getting into the later stages here of a topping pattern. The question is it going to break down, have a sharp pullback, and potentially push up to nominal new highs before rolling over? I do have some cycle work. I updated everything this weekend, and there's some pretty drastic changes in kind of the outlook, and we're kind of struggling with two different time frames: the daily chart cycles and the bigger picture, the weekly chart cycles, and they're um, it's gonna. I kind of mentioned this last week that things are going to be pretty rough here, probably for a few weeks as the market tries to top out and all that stuff. And of course, we got these two cycles I'll cover later today or this week in more detail. But we're definitely at the later stages here of a topping phase. The question is, are we going to get a big breakdown in price here? Very similar to what we saw over here. You get this massive run, and then you get a great big kind of relief correction that flushes the market out, and then the market comes back up for a double top or pushes to nominal new highs, and then loses its steam and falls. And that's something very similar to what could happen over the next few weeks. We could see the market poke up to nominal new highs again, but I think we could see a sharp crack to the downside, and we might see the market recover up and make a lower high or potentially just make a nominal new high, double top, and then eventually roll over going through into May type of thing. So we'll see how it goes, and I'll show you the cycle analysis um, later today or tomorrow. Might do just a detailed video just on the SP 500 broad market and do another one just on gold. There's quite a bit of info there and some things to take into account because there's a couple different time frames fighting each other. Now let's just jump right over to the futures real quick so you can see where we're at. This is the SP 500 continuous contract. We're moving up this morning. We're up about 4/10% this morning. And overall, if we were to, we actually have a little bit of a spike down. So we're going to have a gap up at this point. If we take a look at the SPY and go to the 30-minute chart, you'll see the gap. Here's the closing price from last week over here. And then we've got a gap up in futures for overnight trading pre-market this morning. You can see the spike down in the SP 500. So the fact that we got a gap, usually gaps get filled. And we got a spike going beyond that. So wouldn't be surprised if we see the lows tested from Friday. And so that's kind of where we're at. But in the grand scheme of things, the trend is starting to look, it's lost a lot of its upward momentum. It's trading sideways here. The question is, are we going to have a break and a squeeze to new highs, or are we going to break down and have a first major kind of flush to the downside in equities? And this is kind of the battle we've got going on between multiple different types of analysis, and why we haven't really done anything in the last week and a half, 2 weeks really, just because the market is in this sideways chop with mixed signals. So let me just go back to the daily. Let's take a quick look at the chart of bonds. Bonds are trading a little bit lower this morning, but they've been coming all the way up to test this double high, this double top over here. And again, I talked about this a long time ago. This is a pretty major pattern, a big run up, and how, we could be forming this big cup and handle overall. We got this move down here. So this big cup and handle, this could trade and build a base through here. I was kind of hoping we get it to flush down a little bit lower over here and consolidate, but instead we've seen money really flow into bonds here. But when it breaks out of this pattern here, we could see a massive move to the upside when the equities market kind of goes into crash mode. So I think we could see this continue to trade sideways more or less in this range here and build a big handle before we see massive fear really pile out of equities and all that money dumps into bonds for a big rally in due time. Taking a quick look at the VIX, down 5% on Friday. It's you can see the volatility is picking up here with big spikes in fear, and then it just completely gets the fear goes away. But it's holding up here quite a bit. Obviously, if we get a push higher in equities and a strong rally this week, we're going to see this push down probably to new multi-month lows. And of course, we want it to get down into this lower level. We can get down to that 1250 range. Then we are setting up for a pretty good looking VIX, speculative VIX play that we could see a massive spike, even not even massive, but at least back up to the 15, 16 area from the 1250 is a big gain. But any real fear, and we'll jump right up into more or less the 20s, somewhere in the 20s, and potentially spike up into the 30s. So there's lots of potential. If, ideally, you'd like to see that get down there and reload and be ready for a big pop. Now, taking a look at gold, gold is up 0.5%, silver's up 1.4%. Again, I'm going to do some detailed cycle analysis on this chart simply because showing the cycles in a separate video because we've got a lot going on here. But overall, gold has been holding up here. You can argue it's starting to form this kind of potential little bit of a head and shoulders. We've got the daily chart cycle kind of rolling over, kind of moving down here still. So we might run into some resistance here. If stocks have a bit of a rally this week, we might see gold come back down, test these lows, but it's holding up really, really well. And the long-term weekly chart cycle shows more or less last week was potentially a significant pivot low before we start another multi-move up and then do something very similar to this again where price will consolidate for a while and then go into another multi-week run to the upside. And of course, if that's the case, then we are seeing equities top. And that's kind of what I'm thinking. I'm thinking gold's a little tougher to trade when it comes to cycles and everything else. It doesn't quite move. It's more of a very emotional commodity. But again, I'm going to cover this in more detail. So right now, gold is trading up at resistance, and I think we'll see maybe a bounce in equities over this week, and we could see this come back down. But overall, gold is holding up really well, and the big picture has got it continuing to go higher. Looking at energies real quick, let me pull up the gold miners real quick, just because I know a lot of traders are in there. Gold miners, have been kind of performing really well. They've poked up to another nominal new high. It looks like they're going to gap higher again this morning. And of course, we ended up playing this pop and playing this pullback, and we got back out. And typically, if the market doesn't move in the time frame you expect, the you know there's a lot more than just price patterns to trading. If a pattern shows that it should have broken down and moved to the downside, it probably should have with that time frame that you're looking at. But the fact that it didn't goes to show this market has strength, which is why we are out of the inverse or the short gold play or gold inverse miners play. And we don't really want to touch it because it should have broken down the way that it was set up. It was set up for a very sharp correction and it didn't. And here we are poking to new highs. It's going to gap even higher again today. And we're going to watch this for a potential play to get in. I'm not so excited about gold miners trading up near the highs. I like gold a little bit better at this point, but it looks like we've got more of a bullish bias in the metals, which we've been kind of talking about over the last week, week and a half, because it hasn't broken down when it technically should have. Looking at energies real quick, natural gas down 3.3%. It's pretty choppy down here. Big volatility. We're not going to touch that. And looking at crude oil, it's pretty much flat on the session. But I do have the cycle analysis showing that over the next couple days, we could easily see it come back up and drag itself out for a double top, or at least just chop around in this area for a bit. And then I have it kind of fading back down. And then eventually I think we're going to see it come back down to the 32-30 area, or potentially even lower. But I do have upward bias or sideways bias here this week for crude oil. And I think if crude oil can hold up or continue to move up to test this 42 level again, that's going to lift the stock market from one last kind of gasp, one little bounce before we see stocks roll over for a significant pullback. Anyways, that's really it for this morning. One other thing, let me just pull up the US dollar index real quick. US dollar index refuses to bounce. It continues to grind lower. It's at this significant pivot level down here, pushing lower and lower and lower. And eventually something's going to snap. If this doesn't recoil and have a huge reaction back up, like it's getting really stretched to this side like a rubber band. When you pull it to an extreme, usually it'll snap back and come up very quickly. So it's either going to have a strong rally, we're going to see gold and miners have that quick correction that we want to see that lasts about a week, but a big percentage basis, or we're going to see the US dollar break down and then we're going to see it unwind and have a huge drop. And that could trigger a massive rally in miners. And that's kind of a lot of things commodity based are really pivoting around what this US dollar is going to do. And it's just, it doesn't want to bounce and it keeps getting sold into. And we're keeping our eye on that at the moment. Anyways, that's it for now. Take care. Bye bye.